I believe we need to talk about something that I think is brewing and can potentially be pretty dangerous if you own assets in America. And that is what is being called Sell America. This is something we first heard about during the tariff tantrum, where we were seeing the long bond rise and stocks crash. This was the first time when we really had countries go, hey, maybe we can't trust America. Maybe we should reallocate some of our dollars somewhere else. I believe Sell America trade is actually more important today. And I actually think there are two things going on at the same time. And if these two things collide, it could be frankly pretty ugly. How you doing this morning?
I'm doing great. Very interesting times that we're living in, right? That
Yeah.
we're seeing a lot of changes and a lot of things that spook the markets, no matter what you're invested in. I think a lot of it is geopolitical and geopolitical fears. I think a lot of it is, the unsustainable and tenable amount of debt that we have, and the fear that as the government keeps spending and debt's the only way out, that it becomes, destructive and America ends just like every great empire. That's another big fear, and I think just a lot of what happens at the end of most asset bubbles. We're in an everything bubble where everything has gone up, and it's starting to become evident as headline after headline show that there's so much outside of our control and that the world is shifting. And I think as people start to realize that, they start investing based on fear rather than fundamentals. And that makes people make some very quick, irrational decisions out of fear. And as that gains headlines and momentum, it can become kind of self-fulfilling prophecy. So there's my high level without knowing what your two reasons are that you think that this might be happening.
Yeah, so we're going to spend a bunch of time talking about President Trump because this is the new one. This is geopolitical, but let's get the first one out of the way. And the yen carry trade, right? Simply said, the yen carry trade has been going on for quite a while. You could borrow in Japanese yen at near zero. You could buy, U.S. assets, mostly U.S. stocks, ETFs, things of that nature, and you would just clean up, right? Because you would get, 5% times all the leverage. And I did some quick search. It's estimated on the low end that the yen carry trade is 700 billion, but on the high end, it's like 2 trillion. Wow. And if folks aren't paying attention, the Japanese long bond has been screaming higher day after day after day. And up until this morning, the US long bond has been falling. So you're seeing a collapse. Mm-hmm. And at some point, that spread becomes unattainable because you also have currency risk thrown into the mix. Yeah. So if it gets to the point where Japan, which, oh, by the way, is the largest holder of U.S. treasuries, is forced or wants to, either way, sell lots of their bonds, that will drive down prices and raise interest rate substantially. So I think the first track is the yen carry trade is getting increasingly close to exploding. So that's track one. What do you think?
Yeah, I agree with you. I think that does have an impact, and we started to see a lot of that unwind at the beginning of 2025. I believe it was maybe the end of 2024, where it was like, crud. Suddenly, we can't lever as well as we had. And why this matters to investors, to real estate investors, anyone in the stock market, is because a lot of people don't realize just how much of the stock market is levered. So we talked about that a little bit, in episode 1 today, how people use leverage to multiply their wealth. Well, if people can borrow, let's call it at 3, and they can go invest in something they think is going to make them, 8 to 20, then they've got, positive leverage. And so a lot of times people they trade on that currency trade. And Japan has been one where Japan was an incredible market. And then they had an economic collapse. And so they've, rebuilt over the last decade to 2 decades, maybe even longer. I don't remember the exact years, but they did that in part by, drastically devaluing their currency. And so, that allowed people to say, hey, let's take advantage of the spread. And that is largely unwinding, which means a lot of people who have leverage are going to they can't roll that leverage over. And so it's when that happens, you have something, you basically pull liquidity out of the market. So people aren't borrowing as much, so they're not able to invest as much. And as liquidity sources tighten up, it tends to have a negative impact on asset values. A lot of times people are having to pay off that leverage. And so, they've got a timetable, they've got a certain coupon date and rate, and they've got to pay that off. And so that definitely puts downward pressure on the markets. And I would just add to that, a topic maybe for another day or after we get to point number two. But as we start to see liquidity drying up in many different countries, we have these things called liquidity cycles, and we're coming up to close to an end of a liquidity cycle, which I've talked about before on the show. If you look at, there's a book, actually I have it right here, called Capital Wars by Michael Howe. It's a wonderful book for those that want to go, further on this topic. And here's another book. I didn't know we were going to talk about this, Michael, but they happen to be on my desk, called Global Shocks. And it talks a lot about why you have global shocks and how to invest them. And one of them is currency trade wars, currency valuation trades, as countries manipulate their currency up or down to meet their economic goals. It has an impact on other countries and on trade that a lot of people don't realize. But one of the things that we have going on is that the 6 major countries that provide liquidity into the market in whatever way that they're doing so, usually their bond rates and in issuing debt in their currencies, all 6 of them are tightening liquidity. Now, the U.S. is starting to loosen a little bit, but probably not enough to cause liquidity not to start drying up. And so I expect that not just the Japanese carry trade, but the tightening of liquidity across most major country players may cause you to see a lot of downward pricing on all assets, because most of them rely on liquidity, money, capital, debt. Usually they're borrowing against it in order to continue to invest in assets and drive up prices. So that's going to put a lot of pressure between all the countries tightening, not just the Japan carry trade on assets this year, I think.
Yeah, again, so that's track one. I think, to your point, it's been going on for quite a while. It's increasingly getting tight, which means there just mathematically is some breaking point out there.
Yeah.
And it's closer today than it was a year ago. I think both of those statements are true.
Right.
But that goes to our second track. And, President Trump is clearly running the playbook, frankly, as he was elected to do, America first. And that is causing other countries to get uncomfortable. Most recently with the threats of Greenland, tariffs on the EU, increasing tariffs. Now we have a spat with France, 200% on French wine. If we have this second track, and now we not only have Japan, the largest owner of U.S. treasuries, and now we have the EU who's unhappy with America, this combination of sell America could get ugly really fast. And I think we're seeing some of that today in the market. The market's down. Last I checked, 500 10-year notes up big, which, oh, by the way, folks, if you're in real estate mortgage rates are going up right when President Trump doesn't want them to. Hello. So this America first strategy is making some of our friends cranky, and they can retaliate. We're talking now trade war potentially with Europe and the EU, and this thing could get messy really, really fast.
Yeah, I think it is getting messy really, really fast. And it's really difficult, to understand all the whys. The reality is the government doesn't tell us everything that they know and why they're doing everything they know. And so, for example, Greenland, my first thought is, what in the world is he doing alienating our allies when he already alienated them with the tariffs, and then with telling NATO, like, support your own borders, we're pulling back, start funding more of your own stuff, protect Ukraine against Russia, etc. And so it was already precarious. So then they go after, Greenland and start making threats, of taking over Greenland and tariffing the EU if they don't support it. And that just makes them more mad, and the question I have is why. Now, if you really believe Trump, that it's strategic for defense, then it may be that we really should be more worried about China and Russia trying to attack the United States. And so Greenland becomes really timely and important to the president for national defense purposes. And, I know some people in the military that have said, like, Russia and China are playing war games in that area. not too far off of Alaska. And that's been going on for a couple of years. And so, it makes you wonder what's really going on. Why are we doing this? Is it a good move or not? And so you're going to have a lot of political fodder. But the reality is, no matter what we think about it, you have to understand that these things are going to impact values. It's going to impact interest rates. Like you said, it's going to impact stock values because people start to be afraid of what's going to happen and they don't want their money in anything that's speculative. And if they think we might go to war, which, unfortunately, there's rumors of war all over the place. We're seeing more war and war talk in the last couple of years than we did since World War II. And so, people start to get nervous about what does war do to economies, and what does more debt and more inflation do to economies. And so you start to see all assets start to take a hit because of fear and uncertainty, because every time you're locking up money for, long-term investments, you have to have some level of certainty that your investment's going to keep up with inflation and whatever's going on in the world. And when you don't have that certainty and that control, people are like, let's get out of the speculative stuff, whether it's stocks or bonds, and let's go into, money market accounts and hoard cash. And so we're seeing this rotation out of assets in a very uncertain period of time. And I think that could really cause rates to go up quite a bit and cause the stock market to correct quite a bit. And so there is wisdom in seeing market rotations and seeing writing on the wall and taking some gains off the table and parking your money in things that are safe. But where things go from here, it's very difficult to see. But I do think that adding volatility upon volatility and uncertainty upon certainty is really bad for asset values, at least in the short term. And so people need to be really, really cautious. And there's another great book that I'll throw out there, The Fourth Turning by Neil Howell. And now there's The Fourth Turning is here. And, we really seem to be at a phase that happens about every 100 years or so, every generation or so, where the world really does change, where allies and alliances are rewritten, and economies are rewritten, and social constructs and what the people want are rewritten. And they all seem to come to a head with a lot of volatility and a lot of change that just seems to be suddenly, but they've been happening over generations. And what comes next is, if we are in the fourth turning, as they would argue, is bad, potential wars and potential economic decline and hard things. But we have to be hopeful as Americans when we think about long-term investing that good generally comes out of it, because with pain comes people finally pulling together historically and saying, let's create something better about this, and let's become more unified as a people and work together so that we don't, sell America into collapse, but create something better than what comes. And so I'm hopeful with that said, but I think that we should not take too lightly that we're on the cusp of major change, and that can have a huge impact on society and on our economy.
Yeah, when I think about what President Trump is doing now, I can see where he is going, right? I kind of see the sketches of a plan. That really doesn't concern me. What concerns me is the counteract.
Well,
and again, in a levered economy where everything is at maximum price, the stock market's a record, this is a record, that is a record. If, and again, they don't have to change it from, because again, let's think allocations. Let's say Japan, and again, I'm going to make these up. Japan used to allocate 60% of their their extra yen to US dollars. That was just what they did for years. And then, oh, by the way, a year ago, they said, well, you know what? Maybe not 60%, let's do 52%.
Yeah.
That 8% move is enough to, change the market. Now, if you throw in Japan, other Asia countries, and all of Europe, if they change their allocation model even 20% or 30%, which they have to be thinking given what's going on, that could start a cascading. And then to your point earlier, where does the U.S. American 401k and the individual investor, they just get run over by this avalanche.
Absolutely.
And then they're selling into distress, and this thing gets bloody.
Yeah. And it puts you really quickly into a recession,
Yeah, the
again,
wealth effect on steroids. Yeah.
a very deep recession. And so for those that are like, it's kind of recessionary, it hadn't been great, but it's not going to get worse, it's going to get better. The reality is retirees and the baby boomers who have the most wealth in the United
Yep.
States are seriously over allocated to the S&P right now compared to
Amen.
historical recommendations. I mean, somewhere between 60, I think it was 68 and 80% of household assets of boomers are currently in the stock market. And they're the only, that and the wealthy that are not quite boomers are the only ones really keeping our economy afloat and GDP somewhat positive, along with, AI, for example. And so if they start to have a big hit on their wealth and their income, they will pull back on spending. And, a lot of the wealth absolutely will get wiped out. So it would have a much bigger effect if it happened today than it would have historically if the wealthier generation is wiped out, even 20 or 30% in the stock market. And so they have to be very, very careful. We all need to be very, very careful about where we're allocated. And diversification becomes even more important in an uncertain world where you don't have all your eggs in one basket. Don't have it all in the stock market, don't have it all in crypto, all in gold and silver, all in real estate. You really need to be diversified for anything. And there's you can look up things. I've done presentations on it in the past, where what has historically done well in times of war and in times of recession and in times of inflation and in times of expansion, and the assets and the types of things even within the stock market that you own are very, very different. And even within real estate, we talk about residential versus commercial. Residential is based on real demand and comps, and commercials based on where's interest rates going to be. So, commercials in its great financial crisis, because of interest rates going up, while residential, continued to go up for a few years and is now kind of flat. So you have to be cautious. You have to be careful. And, the one positive thing I think I can say out of the Sell America trade is that we are still the cleanest dirty shirt in the hamper, And so, yes, these countries may stop investing in America short term till they can kind of negotiate out of a trade war or a currency war or whatnot. But the reality is we control the monetary system right now. So until that changes, if it does, and, the BRICS nations are pushing faster and faster to try to, decouple from relying so heavily on the US system, but we do currently control the monetary system. And so you may have short term them really upset, but the reality is the wealthy are still going to invest where they have the chance to make the most money. And that is in the US today. So I wouldn't trade everything and bet against America and think that the world order is so destructive that everyone's going to sell out of stocks and bonds completely. But I'd be cautious.
Anna, you're amazing. You've been here for so many years. Where can people find you?
Great. You can find me on the show most weeks. You can find me on social media at Anna Kelly, REI Mom. And for real estate and wealth coaching or consulting, you can book an appointment with me on my website at annakellyinvesting.com.
Thank you so much.